All right, welcome to the Explainer. Today, we're diving into what looks like the quiet before the storm in the currency markets. It's this really fascinating standoff between the New Zealand dollar and the US dollar. A moment of calm that honestly feels like it's about to break. And it all comes down to this one number. Seriously, 0.6040. For days now, this is where the New Zealand Kiwi and the US greenback have been stuck, just locked in this stalemate, trading back and forth in a super tight range.
So, you gotta ask, right? Why is the market just holding its breath like this? What's causing the standstill? And, the big question is what's gonna be the thing that finally breaks it? Okay, let's get into it.
So let's start with the scene of the action. What you're looking at here is what traders call consolidation. But honestly, you can just think of it as a financial stare-down. It's like neither the Kiwi nor the greenback is willing to blink first. What this really means is the market is just waiting. It's in a holding pattern. Investors on both sides are looking for some kind of clear signal on which way to go. And to figure out why, we've got to dig into the story behind each currency. Let's start with the New Zealand dollar.
Okay, so for the Kiwi, the whole story right now boils down to one word: inflation. It's just persistent. New Zealand's economy is kind of running hot, and that has everyone on edge.
Let's look at the actual numbers, because this is where it gets interesting. New Zealand's latest inflation reading, it came in at 3.1%. Now that might not sound like a crazy high number, but here's the kicker. It's just outside the central bank's target range of 1 to 3%. They're literally just over the line. And listen, this isn't some random blip on the radar. Nope, this is a trend. We've seen inflation creeping up for 4 straight quarters now. So naturally, the market is on high alert. Investors are now expecting what's called a hawkish response from the central bank. And hawkish just means they're expecting some tough talk and maybe even tougher action to get that inflation back under control.
Okay, so inflation's running hot. What can the Reserve Bank of New Zealand, that's the RBNZ, actually do about it? Well, they have a whole toolkit designed for exactly this kind of situation.
And their number one weapon, their go-to tool, is the official cash rate, or OCR. The best way to think about it is like the main thermostat for the entire economy. By cranking up the rate, the central bank can cool things down when they start to overheat, which is exactly what's happening right now.
So here's how that plays out step by step. First, inflation rises. The RBNZ sees this and they can raise the OCR. That immediately makes borrowing money more expensive, which, cools down spending. But for currency traders, this next part is absolutely crucial. A higher interest rate makes holding New Zealand dollars way more attractive to foreign investors. And what does that do? It typically strengthens the currency. All right, let's flip the coin and look at the other side of this pair, the US dollar. Because right now, it is telling a completely different story. While the Kiwi's dealing with all this heat, the greenback is just chilling out.
So, get this. While New Zealand's inflation is ticking up, the US is seeing the exact opposite. The year-over-year inflation rate actually cooled off, dropping from 2.7% in December down to 2.4% in January.
This cooling inflation is a big deal because it takes the pressure off the U.S. central bank to do anything drastic. Then you combine that with a long holiday weekend for President's Day, and you basically got the perfect recipe for stability. The dollar index, which is just a way to measure the USD against a bunch of other currencies, has been trading flat. Everything is just calm.
So, let's recap. On one side, you've got this tense, overheating Kiwi. On the other, a calm, stable greenback. And they're both stuck, locked, right at that 0.6040 level. So, what's going to break the tie?
Well, it turns out this entire standoff hinges on one single upcoming event. All this sideways trading, all this waiting, it's all in anticipation of the RBNZ's big policy decision coming up this Wednesday.
Right now, the market is in this perfect, delicate balance. But trust me, that balance is fragile. Wednesday's announcement from the Reserve Bank of New Zealand is the catalyst everyone is waiting for. Their decision, and maybe even more importantly, their outlook on future interest rates, is what's poised to finally break this deadlock and really set the next direction for the currency pair.
And that leaves us with the final question, right? We are literally watching a tug-of-war play out in real time. When that decision finally drops on Wednesday, is the hawkish, inflation-fighting Kiwi going to pull ahead and surge higher, or will the calm, stable greenback hold its ground and prove to be more resilient? One thing's for sure, the quiet is about to end.